All right. So welcome everyone to our market wrap. मेरे साथ हैं पंकज पांडे सर एंड हम लोग समझेंगे मार्केट की कुछ और बातें. सो सर, ऑफ कोर्स दिस वीक अगेन वंस मतलब थोड़ा सा जो ग्लोबल वॉलेटिलिटी हम लोगों को मंडे को देखने मिला, दैट वाज हमारे पे भी उसका आई थिंक काफी इम्पैक्ट था. बट टुवर्ड्स द एंड आते आते थोड़े मार्केट्स हैव समवट मतलब काम डाउन इट सीम्स लाइक. बट व्हाट इज हैपनिंग, बहुत कुछ आई थिंक अनरैप करने को है यहाँ पे कि क्या हुआ, क्यों हुआ, कैसे हुआ सर.
Yeah, hi. Good evening, Vishu. So I think, see, this week largely was dominated by global volatility, and global volatility came from two things. एक तो when you look at Japanese central bank ने rates बढ़ाए थे, तो उससे yen carry trade का impact देखा जा रहा था. The other is कि there was confusion related to is the US economy heading towards a hard landing. सो एक जॉब डेटा की अनएम्प्लॉयमेंट की वजह से अलग एक ट्रेंड मिला एंड दूसरा जो आपका जॉब्स डेटा होता है, जो न्यू जॉब जनरेशन होते हैं, वहां पे डेटा अलग मिला. तो कहीं ना कहीं मार्केट उस कंफ्यूजन में रहा एंड उसकी वजह से अगर आप देखेंगे तो वी हैड फेयर शेयर ऑफ इम्पैक्ट इन टर्म्स ऑफ वोलेटिलिटी. इम्पैक्ट निफ्टी हैज करेक्टेड 5%, which we feel is a normal correction because the corrections do happen for some rhyme and reason. Although we are not really impacted so much, but we did see impact with markets correcting by 5%. And I think things are sort of normalizing a bit. Currency जो काफी depreciate हो गया था, I think वो सब थोड़ी normalize हो रही हैं. Overall senses ki now global volatility is subsiding, and क्योंकि we are still in a very result heavy season, so you'll continue to see stock specific action and consolidation is going to happen. And next week is also a very truncated week, so you have a holiday in between, so which is why overall sense is that 24,400, if it gets taken out, then that is when the markets will reach or will try to aim for 25,000 kind of a level, which is a previous high. Otherwise, we will remain in a consolidation mode. Vishu, you're on a mute.
Right. Sir, I think RBI का policy भी was on the lines. What happened there, sir?
So short answer, nothing happened. RBI did nothing. So it was largely a sort of a non-event, no change in stance. So also when you look at GDP growth rate also has been sort of unchanged. What they have done is that they have introduced the next year first quarter inflation projection at 4.4%. Otherwise, absolutely no changes. And I think which is why we did not see much of an impact on the yields. And market also did not react too much to that. I think probably RBI could have taken this opportunity to change the stance, because I think what is now becoming more certain is that the Fed is going to cut rates by at least 25 bips in the month of September. And if US is seeing a change in trend, we are comfortably placed on the inflation interest rate dynamic. But let's see. I mean, RBI, I think, is going to do anything only after what Fed does.
Right, sir. Sir, talking about the results this week, I think काफी सारे results आए. Let's maybe start with, there were two public sector banks that released their results. SBI was there and Bank of India was there.
Absolutely. I think, see, one also needs to see, say, within banks, a PSU bank, the behavior is slightly different compared to private counterparts, because this week volatility, we have seen a lot of FI selling. FI selling typically happens in private banks, unlike PSU banks. But they do also get impacted. Now, coming specific to numbers, PSU banks are delivering quite steady set of numbers. So you're seeing, say, both SBI and Bank of India, they did growth in advances of 15 and a half, closer to 15 odd percent. And deposit growth for one was, I think, 8%, and the other one was closer to 10%. Asset quality, there has been improvement in both. And both of them are sort of guiding for a 12 to 14% kind of a larger growth in terms of advances. PSU banks are slightly better also placed from the perspective that when you look at CD ratio, their CD ratio is still good, so they can still maintain a better credit deposit ratio. because for them, CASA is still good, deposit growth is still better. So from that perspective, they're slightly better placed, and which is why we have slightly more positive bias towards both the banks. So for State Bank of India, we are maintaining a target price of 1,000, and for Bank of India, we are maintaining a target price of 165. And valuation wise, both of them look okay because SBI is looking to sort of stabilize their ROAs at 1%, and it's trading at 1.1. So it can obviously command some premium.
Right, sir. So next up, there's another large cap, which was Bharti Airtel, and it was a lot of people were, I think, expecting the result, watching for the results as well because of the tariff hike news that had been in the play this quarter. So what happened there, sir?
So from that perspective, there was a bit of a disappointment because when you look at see the top line and the bottom line, largely on a quarter-on-quarter basis was largely flattish, about 2 to 3% kind of a growth. But the margin profile for domestic operations actually improved from 50 to 55% because as you are sort of adding more premium customers in terms of 4G or postpaid customers, margin profile is sort of getting better. Since cash flow generation was good, the company has been able to reduce their debt by about 5,400. Coming specific to tariff hike, I think the company has done the tariff hike or the industry has done. I think from next quarter onwards, you will start seeing the impact of tariff hike in terms of numbers. And which is why we feel that you will see a lot more better growth in terms of top line growing by 13% next 2 years. Margins will expand from say 52 to 55%. And this is not the only last tariff hike. Our sense is probably more tariff hikes are there because even with this, ARPU, Bharti is going to reach ARPU of about, I think, 260. Whereas the aspiration is to take it to 300. At 300, I think it is going to make 20% ROC, which is going to be a pretty good return ratio. So we are maintaining our positive bias on Bharti with a target price of, I think, 1630.
Right, sir. Next up, sir, maybe you can discuss the infrastructure sector and what is going on there.
So infra, a lot of big announcements are expected, and which is why we are quite hopeful on the entire pack. I mean, be it road companies or be it typical EPC players. Coming specific to results, we had results of NCC and we had results of another company called HGINFRA. Now, NCC saw about 23% jump in top line, HG about 18 odd percent. Good part is that they have maintained a pretty strong guidance of 15% say by NCC for next 2 years in terms of growth, 18 to 20% by HGINFRA. Margin profile is expected to become better, possibly will become even more better because our sense is that with the interest rate cut, these companies are quite sensitive to interest rate movement. The other aspect is that when you look at the recent announcement from the road minister that there could be a potential awarding of 3 lakh crores in this year, because last 6-8 odd months, the ordering, especially on the road side, has been slower. And even NCC is looking at a pipeline or a bid potential of nearly 2 lakh. Their order book is somewhere about 52,000 odd crores. So that way prospects are better, things are going to get even more better, and which is why I feel that both the companies are looking attractive. NCC, we have a target price of, I think, 400 and HGINFRA about 1885.
Absolutely, sir. Next up, sir, I want to know more about ABB. I think it delivered some stunning results.
Absolutely. I think ABB, if you look at it, is a record quarter for the company. And I'll not be surprised if they keep delivering this kind of a good performance over the next few years. Coming specific to numbers, so we've seen 13% kind of a top line growth. We have seen a good margin expansion on a YY basis. So margins have nearly expanded by about 500 bips. So it is a peak margin of 19 odd percent. And that led to a 50% jump in profitability. But that is the good part. The sad part is that the valuations are still quite high. And everyone is waiting for some correction to happen in these stocks to sort of buy. And that is not really panning out. So that is the sad part of the story. So any kind of a weakness, if it happens, I think these are good stocks to be lapped up. But up till now, we haven't seen.
Right, sir. Next up on my list is Eicher Motors. They also declared the results, I think.
Absolutely. I think, see, one concern with Eicher Motor is that, see, volumes are not growing and all of it. I see the challenge is that the entire premium segment is not doing so well. So it's not that Eicher is losing market share. In fact, they have maintained their market share. Now, coming specific to number one, I think when you look at their new launches, so their product mix is getting better. So for example, greater than 350cc segment is now contributing 12% of their overall mix compared to, 14% of the overall mix compared to 11% earlier. And good part also is that the company is guiding for good growth in the next 9 months. So first half or first quarter was literally flat. If they're guiding for next 9 months growth to be good, so volumes are definitely expected to pick up. Another thing which we like about Eicher is that he typically trades at a forward multiple of 30, but now it is trading at 25. So I'm not surprised with the reaction what we are seeing in the markets today for Eicher. But overall, our target price earlier was 5,500. We are working with a new target, so that we will sort of update. But it remains a buy according to us.
Right, sir. Next up, sir, I think what I want to know about is a defense company, Cochin Shipyard. A lot of people have benefited from the stock. And what is it doing now, sir?
So the entire defense as a segment has been a high flyer segment, where it did very well from a price performance perspective. Now, when you look at a company like Cochin Shipyard, the numbers were extremely good, but there are some things I would want to sort of highlight. One is last year the base was quite low, so 60% kind of a growth what you're seeing in shipbuilding, ship repair is largely because of the low base. Second quarter onwards, the base effect will start catching up, so you're not going to get 60% kind of a growth rate. The other is that margin also, ship repair, their margins are quite high at 40 to 43%. Typically, the margin profile there could be 20, 23 odd percent. But in spite of that, the order book is quite healthy. 5 times they already have got orders. Plus, our sense is that they are potential to sort of win for a third aircraft carrier if the government decides that. So potential is all there. Not expecting a repeat of this quarter performance. So any kind of a weakness should be used as an opportunity to buy, because see, mind you, this stock is now trading in excess of 50 multiples on a forward basis. So definitely not a cheap multiple for a PSU.
Right, sir. Next up, sir, we have Apollo Tyres on the list.
So tire, nothing much is happening. Numbers have been muted, but one needs to understand this. This muted show is because the rubber prices have gone up, and that is a temporary phenomenon because there is a shortage of containers. These players are not able to import enough of natural rubber, and that is impacting their margins and consequently the performance. I think as and when that sort of improves, these companies are going to sort of do well. And we've seen the decent double-digit kind of a volume growth in truck and bus segment, which is the biggest segment, and even in exports. So only waiting for the rubber prices to sort of soften, and then only we can be constructive on that.
Right, sir. Next up, I want to ask about PBCL, sir. I think it has been very aggressive in its apparently said that it's going to continue to do so.
So this is one of the most recommended stocks. You'll find the stock across most of our portfolios, even when we sort of talk individually to clients. Now, the company came out with a fabulous set of numbers. The good part is that since Russia is getting thrown out of the carbon black market, this company is expected to sort of a beneficiary of this, which is why Volume growth was pretty good, about 23 odd percent. In addition to that, they have got a capacity of 7,70,000, taking it to about 1 lakh. So, sorry, 10 lakh. So that way, we are expecting to see a good volume growth. So nothing to sort of complain from most of the verticals what we are seeing, and like the management highlighted, our all sense also is that the EPS could be 3x or 4x in the next 3-4 years. So the stock holds good amount of potential. While it has rallied, any kind of a weakness should be used as an opportunity to buy. And for us, this has been a buy earlier and is likely to remain so.
Right, sir. So next up, I want to ask about hospital sector and what's been happening there.
So far, my entire segment is doing well. Hospital numbers are also sort of depicting something similar. You're seeing about 14% kind of a growth in whatever numbers we have seen up till now. That is because one, the pricing like has been doing well. So RPOP growth has been 11% because see, most of the hospitals are performing more of complex surgeries where the charges are higher. And also, when you look at the margin profile is also getting better because your pay mix is more towards insurance rather than sort of cash payouts. So that is also sort of getting better. And since the hospitals sort of keep on maturing, then your return ratios also sort of keep getting better. So I think this is one space which is looking good on the listed side also, and you see a lot of deals happening on the unlisted side as well. And this is one space where I think I've been highlighting for a number of period of time. I think is better looking than FMCG because it's a sort of a compulsory consumption. Liking most of the companies, what we have come up with a buy is Narayana, Lodale, then Shalby, and HCG.
Absolutely, sir. Sir, finally, of course, our most awaited segment of the day, which is your weekly hidden gem. Which one will it be this time, sir?
So I'm recommending Somany Ceramic. Now understand this that last quarter was soft, and it is generally soft for most of the companies because of the heat wave and also because of the election. And but overall, our sense is that in the second half, things are going to lot more normalize. I mean, so you are going to see a double-digit kind of a volume growth, so which is why the second half the growth will is expected to pick up. And this is also coming from the fact that the real estate sales continue to remain good. Once these projects near completion, there is a good demand for tiles. So, Somany being the second largest manufacturer should also benefit. The other perspective is that the margin profile is going to get better for these companies, including this one, because gas is the single most cost, the biggest cost. So we all know that China is not doing well. Crude is down, so gas prices are also soft. So overall sense is that the gas prices remaining soft should boost margins as well, and which is why you will see a lot more higher growth on the profitability at about 32 odd percent. And so which is why I feel that from second half onwards, I think we will start looking a lot more better for some of these companies. But good time to buy some of these names is during when the chips are down. So which is why I'm recommending this with a target price of 900.
Brilliant, sir. That was really amazing, sir. Thank you so much for your time. We'll be back next week with Pankaj Pandey, sir, for another weekly wrap. In the meantime, if you have any questions for Pankaj Pandey, sir, please do mention them in the comments and we'll try to take them up in the next session. Thank you so much for watching, everyone.
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.